Hi, my name is Becky Maguire. I'm the Office Managing Partner at our Assets office here in Leeds, and I'm joined today by Tariq Javaid, who's a Corporate Finance Partner. And we're going to be talking today about the possible impacts on the M&A market of the recent general election and the confirmation of a new Labour government. So I guess that's the first question, Tariq, over to you in terms of the general reaction you've seen from our clients and from the community more generally.
It's been quite interesting where the Labour government have been fairly quiet on taxes, especially capital gains taxes in their manifesto, in terms of if they may raise it or not, in contrast to the other taxes where they've actually said they will not raise them. So the concern that it's caused a lot of across our clients and a lot of SME businesses that we work with is that the Labour government will raise taxes.
So tell me a bit more about that tax change. What's the concern there from a business owner point of view?
The concern there is that if capital gains tax goes up, it becomes less attractive to sell your business. And if it becomes less attractive, and especially if capital gains taxes come parity with income taxes, it erodes the value of selling your business. And therefore, is it not better as an owner, and this is the thoughts our clients are having, to just carry on running your business? What will that do? That will stifle entrepreneurship and it'll start slowing down. People will delay selling their businesses and therefore the mergers and acquisition market will become more stagnant, and that is a concern.
Okay. So what's the deals market like right now? I suspect there's been a little bit of turmoil in the run-up to the general election. Are we starting to see that settling down, or are business owners still thinking about sales and so on?
So the market has been quite buoyant, and it has been for a number of years, especially in the SME market. We don't expect to see in the short term a slowdown in that. And that has been driven by, there are a lot of corporates out there who are cash rich, who are hungry to make acquisitions to grow their organisation. We've all seen a lot of consolidators in the market who, in certain sectors such as healthcare, environmental, industrial, who are buying lots of companies up and amalgamating them. Also, the private equity market, there's a lot of liquidity, and there has been for a number of years. They're very hungry to make acquisitions, and that's also driving the market up as well. And if you look in the SME market, a lot of sales are driven by retirement sales. And since the pandemic, it's accelerated some people's retirement, and that we're still feeling the impact of that. The general risk is if capital gains tax goes up, people may just slow down their retirement plans.
Are we seeing any change in the view of the UK from an overseas market perspective?
We're not. The UK is very well placed in terms of attracting inward investment from overseas companies, and especially as we're seeing a bit of headwinds in the Eurozone, especially in Germany and France at the moment, we seem to be well capitalised. And actually I've been working on some sales where a lot of companies are actually seeing the UK still as a gateway into Europe, even though we had Brexit. And if anything else, I think our UK financial markets in London are very strong and admired across the UK, which also adds up to making a good proposition for buying into the UK.
Okay. So you've talked about the possible impact on a capital gains tax raise for business owners thinking perhaps about slowing down plans or maybe putting them on hold. What should business owners who are thinking about their next steps be doing right now, in your view?
I think they should continue on the trajectory they're thinking of, not slow down their plans. I think they should be speaking to their advisors. Very important, because it does take up to about 12 months to do a transaction if you're selling or buying a business, and therefore it's long-term planning. What I don't envisage, and this is a personal view, is that capital gains tax will rise overnight, because the noise the Labour government have been making is about stability in the business and growth. So therefore, whilst there is a risk, and I think they will raise probably slowly, I think it's very important that the business owners are starting to plan their exit strategies earlier, speak to their advisors so we can help them get the businesses ready for when they do decide to hit the trigger. We can do it.
Okay, great. So I guess just to sum up where we've reached in terms of conclusions, we might see an impact on tax. It's not yet clear. We wait to see in the autumn what the fiscal statement and what the tax rises are at that time. Your message, Tariq, for our business owners out there is don't rush, plan, think about your next steps, consult where you need to with an advisor, and think about it really carefully.
Yeah, absolutely. I think it's about considering, planning, not having a knee-jerk reaction, not holding off on your plans because you think they might rise, because obviously we're still waiting to hear as the Labour team are being built up and put into place of what their plans are. They are making noises around growth, and therefore I think it will keep the markets going up. But we need to bear in mind that capital gains tax is an easy tax to hit without losing votes. So in the longer run, I would expect there will be increases there, and therefore start planning now.